Alrighty, hello everybody. So you opened your first Roth IRA, or in fact, any kind of brokerage account, and now you're trying to figure out, how do I place a trade on Fidelity? Well, don't worry, I got you. If you check this out, as soon as you log into Fidelity, what you're going to see is there's this trade button up top. Now, if you have multiple accounts like I do, multiple different brokerages and trading accounts that you can buy stocks, funds, ETFs, all that good stuff in, then no problem. When you click this trade ticket, what you're going to see is a mini pop-up, and all you need to do is click on drop down here and then quickly find which account you want to trade out of. So for instance, if we're going to do that in our Roth IRA, what you're then going to see is right here your available cash that you can trade and your settled cash. All that means is how much money do you have that's liquid. The settled cash is how much you have that's liquid that hasn't been used to buy any stocks yet. It's just sitting in your core account. And up top, the cash available to trade, that's how much money you have left after any orders that you've already put in. And we'll talk about those orders in a little bit, but what I really want to walk you through is this trading ticket. So as you can see here, as long as you know the ticker symbol, you can usually Google this and figure out whatever you want. If it's like Apple or a mutual fund or an index fund, there's going to be different kinds of transaction types that you can go through, whether you're trying to buy stocks, do options, or mutual funds. We'll talk about these in a later video, but you don't have to stress too much about these. Most people just stick to the stocks and the mutual funds and the ETFs. And the beautiful thing is that you don't have to do anything. Like if you don't know whether it's a stock, an ETF, or a fund, all you have to do is just type in the letter and it will auto-populate for yourself. Okay, so one really popular stock that's been going just up recently has been Apple. And man, it has been really great. If you wanted to buy some Apple right now, what you do is you just put the ticker symbol in and double check that the name is correct right here. The ticker symbol for Apple is AAPL. You can see that currently today, the price of Apple is $499.23. And you also get some information here about the bid, the ask, and the volume. All this means is that the bid is how much somebody is willing to pay for a stock right now. So if you're a buyer, the buyer spread right now is about $499.90. That means there's somebody here, one person here, who's willing to buy Apple at $499.90. And the ask right now is $499.95. So that means that there's a seller out there who's willing to give up their Apple shares for $499.95. Now, it's your choice on where you set your prices. Just keep in mind that you should do your due diligence and check out what you do want to spend, what you don't want to spend, what's overpriced, and what's a good deal. But if you were trying to fill it right now, the market value would be at $499.23. And that's the price that you'd be able to put it in if you just put like, oh, buy at market. It could fluctuate very briefly in a few seconds. So be careful about that. Anything could happen because what you're waiting on is for the broker, in this case, Fidelity, to kind of put you in touch with somebody who's selling the stock so that you can buy it. Okay. Now the volume is just telling you how much of that stock is out in circulation. Basically, the higher, the better. There's another term out there, which is called float, which is how much is actually being actively traded in and out of the whole volume. But the idea is the more that you have, the easier it is for your trades to fill. Like some people will place an order and you'll see the price sit there, but it will just not buy or sell for a long time. And you're wondering why? Well, it's just because they haven't been able to match you up with a buyer or a seller yet so that you can take care of that trade. Now, if you keep going down a bit, what you're going to see is that we have some information about your trading sessions. Fidelity is really great because you can also trade after market or pre-market. What that means is that it's extended hours. So typically, hours open at 9:30 a.m. in Eastern Standard Time, and they close at 4 p.m. on every day. So it's not like you can trade at midnight, but there are certain brokers out there who do allow extended hours, meaning sometimes a little bit before, sometimes a little after. We'll talk about this later on in a separate video about whether you should or shouldn't do it, the pros, the cons, and all that good stuff. But just know that you could still potentially place orders and have them filled after or before if you have to work a day job or something. Now, the likelihood of them getting filled isn't that high because the volume will be much, much less. You're not going to see as many people there in the aftermarket or pre-market hours, and the volume may not be the same, so it may not even get filled, even if the price is staying there. But that's just something to keep in mind if you wanted to go down that route. But we'll just keep it to like standard hours right now, and then you get to choose your action. Now, if I'm gonna buy some, I'm just gonna click buy, and then I'm gonna click what my quantity is. If I wanna just buy 1 share, 2 shares, 10 shares, 100 shares, and if you wanna even calculate quantity, they have this great little thing right here that says, okay, let's say you only have $1,000 right now. You just opened up your account, you only have $1,000. How much can I buy at what price, right? And these are whole number amounts. You can't buy fractional on the computer, but we will show you another tutorial on how to buy fractional shares through Fidelity, but you have to use your mobile app, either on an iPad or an iPhone or some kind of mobile device. If you wanted to figure out, okay, how many shares could I buy with $1,000, it will tell you, and you could even manipulate the price. Let's say you only want to buy Apple if it's at $490. It'll tell you the max amount that you could buy is 2, and it's going to cost you about $980. So you just click apply, and boom, you got your price right there. And when you do this, it automatically updates your order type to a limit order. Now, I just want to transition us over to this other slide real quick so that we can talk about the order types. So no matter what brokerage you use, you're always going to see some sort of order type, just like what we're seeing here with market orders, limit orders, and for more advanced traders, the stop loss, stop limit, and trailing stop loss and stop limits. So I just want to quickly walk you through what these are. If you take a look here, the two most basic things that you need to know about order types are these two, the market order and the limit order. These are what the majority of people use, especially if you're a beginner and you don't really know what to do, use these ones. The market order basically tells you, hey, you're going to buy and sell at whatever price the market is currently pricing. So like you saw on our Fidelity screen, if it said $499.23, that was the market price, then it's likely that if you were to buy or to sell, it would fill at that price. Now be very careful, because that price may or may not be real time. There could be slight fluctuations. It literally just takes 1 second for the stock to skyrocket or drop by a ton. So that's why market orders can be kind of risky if you're not sure whether or not the price is stabilized quite yet. Limit orders are a lot more popular because it lets you set exactly what price you want to place the order at, whether it's buying or selling. So for example, if you wanted to buy Apple and you were okay with the price of $499.23 and you didn't want to risk it suddenly going higher if you were going to buy it, then what you could do is you can say, okay, set the limit so that I will buy X amount of shares. So for instance, like 2 shares that we had for $499.23 a piece per stock. And then what the computer will do is it will check your order, place it, and say, okay, let's see if it happens to be at that price and fill it, or within about a penny's range. If the price happens to be lower, it will fill at the lower price. So that's just something to keep in mind. And the same is true if we're talking about selling the stock. If you want to make sure that you sell the stock for like $510, for example, you're like, I only want to sell this at $510. You can set the limit so that the price is $510. And if it happens to just skyrocket past 510, the computer will still fill it for you at the higher price if it's within that like second range. Okay, so be careful. It's a hit or miss. It's happened to me sometimes where I get lucky and it fills a little bit higher or it buys a little bit lower than whatever my limit was, because that happened to be how quickly the price fluctuated. But other times it will try and hit right at your limit price, which is why limit order and market order are really all you need whenever you're placing orders for stocks. Now, if you want to be more advanced, and we'll have a separate video to talk about all of these in more detail, just to really explain what's going on with some examples, but you would use something like stop loss, stop limits, trailing stop losses, and trailing stop limits. Now, for the purposes of today, I just want to give you a really brief overview. Leave this slide up if you wanted to read this in a little bit more detail, but stay tuned for our other video where we will talk through exactly some examples of how this will work. But essentially, a stop loss is for selling. If you wanted to place the order and let's say you bought Apple, but you don't want to lose out. This is really popular for day traders because they don't want to hold any stocks by the end of the day and they want to minimize their losses. So if they bought the stock and suddenly like it starts to drop by a certain amount, you can set a stop loss so that if it hits below that trigger price, you set the trigger price, like say, hey, stop this. If I bought it at $499.23, but I want to stop it if it drops to $490, what it will say is, okay, if the price of Apple gets down to $490, it's then going to immediately execute the sell order and sell at whatever is on the market price. So be careful there. It will sell at market value. That's just to prevent you from having to look at your phone or look at your account and really track the price the entire day. Now, stop limits are essentially what a stop loss is, but instead of triggering at market price, But instead of triggering at market price, what it's going to do is it's going to say, okay, now it's time to sell the stock at the limit price that you had set. And the great thing about stop limits is that you can also do this for buy orders as well. We'll talk through that in a little bit more detail elsewhere, but just know that if you wanted to do the buy order, it would be almost something in reverse. Trailing stop loss and trailing stop limits are great because you don't have to define the exact price. You can just define a certain percentage or a dollar price if you wanted to by how much you're gapping. So let's say like the price of Apple keeps skyrocketing up from $4.99 all the way to $5.10, but then you're going to say, I want to capture those profits right away. So if it suddenly drops down to 500, if you set it so that the stop order will trigger at a specific gap. So it's not going to just be at like 490 or something, but you can gap it. So, hey, if it drops more than $5 after its bull run, sell it. That's what a trailing stop order does. And like before, stop loss means it will sell at the market price after you hit that trigger, and the stop limit will sell at your limit price once you hit that trigger. So now that you know what all these things mean, what most people use is this limit order, and people who are trying to do day trading or swing trading, who are taking more risks on maybe smaller end penny stocks, they'll use more things like stop limit and stop loss, or trailing stop loss or stop limit. Now, we like to keep it simple here. You're trying to invest as a beginner. You want to get in, you want to get out, and you want to just keep it simple. You don't want to stress too much about it. Well, that's no problem. You just click limit order, whatever price that you're willing to buy it at, and then the time in force tells you how long you want this order to stay in your queue. So you can say it will expire at the end of the day, or you can choose, oh, I want it to be good until canceled. You can choose how long that's going to be. So let's say you're going to buy Apple at any time, whether it's going to be 3 months from now or 2 months from now or tomorrow. If the price hits like 490, you're like, I want to buy that. I don't want to think about it. I don't want to be on my phone checking it a bajillion times a day or getting an alert and then missing it for that one brief second that it shot down to 490. It has happened to me before. I set a limit for Shopify to buy, and it was a good till cancel order to buy Shopify when it was only $700. And for like literally 1 second, the price of Shopify went from about $780 down to $700. And I was like, oh, I got really lucky. It filled the order immediately. I didn't have to think about it. I didn't have to search for it. I didn't have to scramble and hit a hotkey to make it fill. And then I instantly got equity because the price of the stock shot back up to about 760 for the day. So this is a great way to keep things passive. We're interested in passive investing here. So, set your good till cancel order. You can even set what time you want it to expire, if it's the morning or in the afternoon, or you can just say fill or kill. What that means is if you check out here, it's going to fill it right away for the complete order, or it's going to cancel it. Okay, so this is typically used by larger trades. What they mean by that is how many are you planning to buy? Let's say you're trying to buy like 100 shares of Apple. So there's been a time where they'll fill partially. So they'll try and put you with buyers who maybe they only want to sell 2 shares. You'll buy those 2 shares. You still have 998 that need to get filled. So that's all it means by fill or kill. If you want to own all of them at once or none of them at once, or you can switch to something called immediate or cancel. And as you can see, if you just hover over the question mark bar, if you're not quite sure what any of these mean, all the definitions are right here for you. Immediate or cancel just means if you place it right now and you're pricing it around the current market price, you want to get as many possible shares as you can. And then if they can't fill the rest of them, that's okay. You're just moving on to the next stock. So this is really good for the folks who are trying to do day trading, who have to make really quick trades. Of course, their interface will be a little bit different. They'll have a bunch of charts and everything, and they'll do everything with hotkeys. But this is great if you're just trying to get started and see what's going on, what's happening. Now on the open, I never really use this, but it basically just says, I want to fill this only at the opening price. So this is great if you expect the price to suddenly drop. Like that one weekend way back a few months ago where Warren Buffett over the weekend, we got notice that he sold all of his shares of like Southwest and all of his airlines. And everybody was like freaking out, going like, oh my gosh, the price of Southwest and everything's just gonna go. And you were like ready to lose it all. What you could do is say, I'm not going to wait for a specific price. I want it that the minute it opens, I want that highest price and I want to sell it right away before it dips too far. That's what some people use on the open for. Other people that I know use on the open if they expect it to be really low right before it skyrockets, but they do a ton of analysis. And that's just something to keep in mind if you want to put time and effort into studying your stocks, which you should, but studying them in detail, looking at their 10Qs and 10Ks and their SEC filings filings and all that stuff. Just something to keep in mind if you're going down that route and going to learn how to do this more intensely. Now, let's say we're instead going to buy a mutual fund. Same thing. All you need to do is type in whatever mutual fund you like. So for instance, since we're talking about Fidelity, I really like their 0% fee FZ Rocks. And what you'll see is it will automatically update once you click that to now say mutual fund. And it will update to the mutual fund, but technically this is an index fund. It's not being actively traded. But what you'll see then is the price. You can also access the prospectus if you wanted to do a little bit of research on it, the details about the fund and all that. And remember that for funds, you don't know the price real time. You only know when the market closes. But other than that, it's essentially the same. You can buy or sell. But the beautiful part about index funds is that you can sell either in terms of shares or you can sell in terms of dollars. Now, Fidelity has this great option to do the fractional shares, which we mentioned, which kind of takes away the need to use funds unless you particularly like one. But it's up to you whether you want to talk in dollar money or in share money, right? If you wanted to buy in terms of dollar, you just click buy, tell the amount that you want to buy, like 20 bucks, and then you can set this to either preview the order or fill the order. Okay, now if you wanted to sell, you can also say, hey, I just need $1,000. It will tell you how many shares you have currently, and then you can just put out, okay, I want to get $200, right? And that will give you an idea of how many shares that you're planning on selling. And there are a lot of options, right? Sell shares is self-explanatory if you want to just sell one share at $12.31 or sell all your shares. And remember that this will only update at the end of the day if you're talking about a fund. So I just wanted to say thanks so much, everybody, for checking out Winning Lifestyles and another one of our videos working through Fidelity. In the future, we'll be getting more and more videos that walk you through Fidelity, how to use it, how to understand your account and have things reinvest, and also about other brokerages that we also use, like Schwab, Vanguard, and Betterment. But until then, we want to say thank you so much. If you enjoyed this video, do us a huge favor and smash that like button, hit subscribe, and ring the notification bell. And please remember to do your own due diligence. Everything we say, we're not financial advisors, not financial planners. If you don't understand something, hit up Fidelity's customer service line or use their chat function. They are around like 24/7, which is one thing that I really love about Fidelity. And it pops up right there. You'll get connected to an agent after some time, and they'll be able to walk you exactly what you need. But please remember, we are not financial advisors nor financial service professionals. Everything we're doing here is just for funsies and educational content. Thanks again for checking us out, and we'll see you again soon.